Welcome to another episode of Leaders in Lending. I'm your host, Matt Snow, joined this week by Adam Goller from Cross River Bank. Adam, thanks for joining me.
Thank you, Matt. Really great to be here.
Yeah, always good to catch up with you. Maybe why don't you start by introducing yourself a little bit and telling everyone what you do at Cross River today?
Absolutely. I've been in the Cross River for almost the better part of 16 years since the very beginning, and it's been quite a journey. And my current title today is I run all of Fintech banking, and really what that is really relevant to this call because we are essentially powering non-banks to offer banking products. And we started with lending many, many years ago, and have really transitioned to be a full stack, full product, robust supplier of banking products for non-banks. And so today, what we offer is lending capabilities, card capabilities, deposit capabilities, as well as a lot of payment capabilities.
Great. And I've been really interested lately, and was thinking about our conversation about companies that started in, maybe more tumultuous times in history. So you're part of the founding team back in, the wake of the GFC, starting Cross River. Maybe talk a little bit about that, like what generated the idea, like, hey, here's a great time to start a bank.
So it's funny, we actually had a philosophy that our CEO, Jill, always talks about, which is that hire people who've been through some bad times as well. People who've only been through positive cycles or only good times tend not to know how to react when things don't go well. And so many of us were working in industries or companies that were impacted by the GFC, the Great Financial Crisis, mostly around the mortgage industry. Myself, prior to Cross River, I came from a rating agency. I was specifically focused on residential mortgage-backed securities, RMBS, and so obviously we were significantly impacted at the time. And so I saw really the peak of the mortgage industry and also the big downfall from all the CDOs and the creative underwriting that was done over a number of years. So it was a really interesting time to form a bank. As you can probably imagine, there were not many banks that were lending at that time. And so what
Mhm.
it really brought was an opportunity for us to do something a little different. The initial idea was really to raise money to build a bank that was going to have fresh capital, sort of no bad habits, and start
Mhm.
anew at a time when banks weren't really lending at all. And so that was the first strategy. It wasn't really a fintech play to begin with.
Hmm.
What happened over time as we started to build, we realized that scaling a bank is really tough when you're going only direct to customer. And so we started learning about these partnerships initially through a company called Green Sky, where we could leverage the expertise of others to build not only our balance sheet, but also to build programs that would enable banking, not only to be direct banking support.
Interesting. And I don't know if you follow the podcast Founders. Dave, our founder and CEO, is very fond of that one as well. And I think what something interesting similar about that, I think, with entrepreneurs or founders, it seems like there's always a really strong idea for a company, but also like the ability to pivot. Like, how did you guys find that balance of like, here's something that we're going to go like full steam ahead against an idea, and then also being nimble enough to pivot when and stay true to that.
In my view, that starts with culture. I think you mentioned Dave, and Dave's obviously from came from Google and other companies he worked at. But to me, if the CEO has a culture of being an entrepreneur and being open minded to ideas, I think that trickles down to all the employees. What really we learned from an early our early years was that if we look at every opportunity, we'll
Mm.
have many opportunities to pursue. And so if we saw 10 ideas and only two of them came to fruition, that's absolutely fine. But for us, it was about being open minded, going in with a fresh outlook, and not turning over every rock, assuming that everything was a
Yeah.
possibility. And if you go in with the attitude that everything's possible, you wind up with something great.
Yeah, I like that approach. Did you find were there consistent themes or ways that you evaluate those opportunities? Was everyone kind of aligned on that same type of approach, or was there a lot of debate around like, no, this is the opportunity and why?
Yeah, so I don't think there was a ton of debate. I think as a young institution with limited capital at the time, we had to be very efficient, and so I think there was this balance between what is the most scalable opportunity. So it has to have a lot of scale because you're not going to invest in it if it didn't have scale. At the same time, like what is the capital required to turn a profit? Because if the lead time or the life was 3 4 years out to turn a dollar of profit, it wouldn't make sense to pursue that as well. So it was almost a balance of efficiency between cost and profit, as well as sort of the tech required and other investments of time that it sort of did not allow us to pursue.
Yeah, that makes sense. And actually, so I went out and did a little research to see what other companies were founded kind of in the wake of the GFC. I'm sure you've heard of these, but NerdWallet, Uber, Venmo, Groupon. Groupon, I was surprised to see is actually still around. I think they have like maybe half the customer base that they did at their peak. But those other companies seem to do pretty well starting at that time as well.
It's not a coincidence. I think, if you think about zooming out of the business industries, but and banking industries, if you think about life in general, it's not uncommon that many of the best things come out of trials and tribulations, and the best ideas are formulated out of need. When they say that necessity is a mother of invention, that's not a lie, right? When someone has a problem they need to solve, that's the quickest way to get to a solution because when you're just ideating around the room and throwing ideas out, okay, we'll pursue this, we'll pursue that. When you're actually in crisis mode, and COVID was a good example of that, when so much came out of COVID and even the GFC, right? When you think about the proliferation of banking and the access to banking that happened post GFC, the last 10 years, that was accelerated 30 to 40 years of banking life.
Yeah, totally agree. And you mentioned, coming out of COVID too. I did a quick search, but didn't find any like meaningful companies maybe that were started or still around since then. I saw one stat that, the IRS saw a huge increase of the number of companies started. So I think there's an average of like 100 to 125,000 applications a month for new companies that peaked up over 150,000. And that trend has seemed to stick around. Any companies that you've seen like start out of COVID that kind of capitalized on that environment that you were mentioning, or think have some staying power or even changed the landscape for fintechs and banks?
I'm trying to remember the names of companies, but there were definitely products that we saw that came out of COVID. I think there were. I know we were involved. I don't want to say the name in building a product with a current customer of ours that was a unique spin on an existing product, and it was really almost like came out of the idea of like people aren't leaving the house anymore, and types of financing maybe that would enable that to be easier for customers who weren't going to the point of sale anymore. In one case, and the same thing for other areas of banking where there were folks who understood some of the core problems that COVID showed us, and whether it be healthcare financing, there were solutions that came about from people realizing that certain things just weren't going to continue to exist the way they were before.
Yeah, and I've heard you talk before too about maybe the speed or the accessibility of banking and the innovation that continues to happen there. Is that something you continue to see, or think it is still an opportunity within financial services?
Yeah, it's so interesting. We're still seeing a lot of that. It's a great question. And I think there's almost this balance where, on one hand, we're still seeing a ton of creativity in
Mm.
banking, a lot of folks who are trying to do things slightly differently than the next competitor. At the same time, because it's financial services, there's this inherent almost slowness to it. There's regulatory pressure, the rigor of the process to get something off the ground is so much stronger than perhaps in other industries. So it does balance itself out. There is a lot of like creative, ingenuity coming out of companies that we work with. At the same time, there's natural rigor to the process and filtering of the process that's created by the regulatory environment.
Yeah, what other things do you think enable that? I mean, I can think of one just being kind of the digital nature of so much of our currency and how much, the reliance on physical currency decreasing over time, technology, like what other enablers are maybe newer that are helping companies take advantage of that?
It may not be newer. You're alluding to almost things like AI as an example, things that are accelerating maybe some of the banking services. But to me, in my own view, there's just the proliferation of things becoming more commonplace. As an
Hmm.
example, the comfort of people who use their phones for everything, right? Whereas in the past, applying for a loan on your phone would have been insane, right? But today, people are willing to go into a store, using just their phone and clicking on a button and taking financing for that. Transactions are happening in real time. But real time payments would have been a real scary thing for people, 5, 10 years ago. But money is moving so quickly, and people's willingness to move that money quickly, understanding that there are risks involved in the uh, lack of friction in the process, that really says a lot about people's trust in the controls, trust in the systems, and the advancement of thought amongst the general population.
Yeah, that is a really good point. I hadn't thought of that. The consumer's comfort in using other technology that maybe paves the way for banking to take advantage of the idea of using a phone as a primary way of transacting, opening new accounts, moving money. Definitely couldn't have been led by banking, I don't think, until other companies made that a much more safe, comfortable, technology.
It's funny because if you think about it, my kids are this way. I literally was with my kids last week. We were going out somewhere, and I said to my son, who drives now, he's 17. I said, "Do you have your phone?" He said, "Yes." And I said, "Do you have your wallet?" He said, "No." And can you imagine a world where someone is more likely to take their phone with them than their wallet? Because to him, at his age, at his generation, the wallet is insignificant, but the phone, that's not insignificant.
Yeah, I've noticed that a little bit too in my life, and I know you're a bit of a runner, but like even I used to have like the really thick wallet with all the cards, like everything in there, and I get to the point where maybe I can just run with my watch, and if I need to pay, like I can wanted to stop for a cup of coffee afterwards, or I get lost, I can pull up a GPS like even on my watch, and I may not even need the phone.
It's funny because when you run a marathon, depending on where you're going, to get there can be a challenge. Like, because you want to drive because it's hard to park, and then you get a car after at the end of the race. And so, what do you take with you? So, usually at the starting line, there's already food, there's drinks. You don't need anything like that. But for me, it's obviously my phone. So I can listen to something, so I can reach people, and then as little as possible. So you have this something, the little pockets in your shorts. You can fit a credit card in or an ID in. But essentially, your phone is the only thing you're really taking with you, and you're carrying on you, other than a few bucks in case you want to buy something. But so to me, like that whole process, just reinforces the fact that like we're realizing more and more that like our digital footprint, our identity footprint, our banking footprint, everything we do is really embedded in that device. And the more that the banking financial services are enabling their products to be offered and engaged through that device, I think the more prolific the adoption will be.
Yeah, and that's probably enabled a little more consumer choice, or have you seen that in terms of who they choose to bank with and the types of products and services, again, versus having to go to like your local branch and talk to a banker and kind of interact with the financial industry through a person or a physical location. Now I could download an app, I can search for loans, I can figure out who has the best deposit rates, and move that money around pretty easily just on that device.
The best example, like my kids, like kids today have so little patience to talk to anyone for a long period of time, right? Their attention span is a lot shorter, and so the less they have to talk to someone to get something done, the better. They'd rather interact on their phone, have maybe a short conversation. So yeah, the more you can do to reduce friction in the process, it's interesting in that what I see a lot here in the companies we work with is that there's so much energy expended and dollars expended on improving the UX. And you think about it like if the product is the same, why does the UX matter so much? And it's exactly what you pointed out, which is that if the friction is even one iota less and conversion is a second shorter, you will get a far higher adoption rate and conversion rate. And it's really meaningful. Again, without naming names, there's a company we work with who we were talking about a certain change we wanted them to make to a disclosure in an online form, and they were somehow able to run stats, and they thought there would be up to a 70% reduction in conversion from one change in the UX. And that was about a year ago. That was eye opening for me because they have it down to a science where they can actually tell you if you change this one feature or one part of the experience, you actually will see a meaningful change in adoption, conversion, whatever you want to call it, and therefore revenue and profit.
Yeah, I think that, data-driven approach is so important where every interaction can have such a dramatic impact. So knowing and testing and learning those things is critical to stay ahead.
Absolutely. I mean, I think that will become even more important over time. The more we move to a completely digital environment, it's funny because even I'll call it like older generations are adopting some of this technology, and they're getting more comfortable with interacting online. I mean, I have my father's a good example where like I'll buy something for the whole family and he'll want to pay me back, and used to write a check and leave it in an envelope at my door, and I said, Dad, it's kind of annoying. And so one day I was at his house. This goes back probably about a year and a half ago, and I went to his phone. I downloaded Zelle, the Chase app. I'm like, you can send money this way to me. And he's done it now twice successfully over the last year. And our lives have changed forever for the better.
Right? Yeah, you've converted him to that way of operating. Awesome. So what other things are you seeing partners do to innovate? Like, is the use of API or the idea of open banking continuing to be something that people are adopting?
Yeah, I think so. I think that having a centralized location for controlling all of your financial services, I think is really important to people. So when you think about these apps that allow you to have all your accounts sort of routed, visible from one place. That's super important. Just as one example, last week I was realizing that I've been at now call it three and a half companies over my career, and you have your 401k from the first one, the second one, and you keep rolling them over. But sometimes you also want that like diversity of like who's the vendor on that account, and they perform differently. And so an app now that you can basically uh, consolidate and centralize all of your retirement accounts into one place in your broader portfolio and see everything in one place. That's really powerful for a customer because again, time is important to them, efficiency is important to them, and control is important to them.
Hmm. Yeah, I think the control is the key point that you mentioned, or that diversity. I think a little bit about, maybe this isn't a perfect analogy, but like an entertainment where we had the cable industry that no one loved, and you're paying these huge fees for all these channels you never watch, and then we start to get streaming services, and now everyone's like, I've got 20 different apps. I don't know where to go to find the show I want. So how do you like balance that control? Yes, it's great that we have all these new players creating really interesting content, and you've got a lot more control over what you can watch and what you want to pay for. But now there's such a diversity of providers. Like, I just want things simpler again.
Yeah, simple is hard to come by. I would say banking has become simplified. Like even if I go into my own bank now, I bank with Chase personally for most things that I do. I can do most things from that one app, even not going externally. So I think that even the bigger banks have adapted and adopted, I guess internal capabilities for allowing people to do things in one centralized location. I think unlike maybe entertainment, which is so much driven by like okay, I have one person in the family who wants to watch this, and one person wants. Here, there's really generally one person who's controlling sort of all the accounts for the family in many cases, and so
Sure.
it's easier to be centralized. There's not a lot of people yelling at you to get different apps.
Yeah, yeah, that's fair. And maybe I want to circle back to something you alluded to earlier around the starting of Cross River and the idea of culture. Like, when you think about building a team, how do you quantify something that maybe is harder to pin down, like culture? What makes a good founding team, a good, startup, a good company that really can operate efficiently together?
Great point. Actually, this is actually a great question. I thought about this a lot. One of the things I think is important to understand is that at different stages of life of the company, it requires different people. And what I mean
Mm,
by that is that when you're starting a new company, you need a couple of things: people who are creative, because you're building from the ground up; people who have patience, because it takes time to build something. It takes time to get to public offering. It takes time to build a product, build a company. And then in addition to that, I think you need people who are less stuck in their ways, people who are
mm,
flexible. As the company matures, you start having this need for people who have a lot more rigor and have a lot more process focused ideals, and have perhaps backgrounds that enable them to create those controls to make sure that as you're growing you have the right controls in place. And so there is like this like life cycle where you need different skill sets at different points of the company's history. But
mm.
overall, I think when you're interviewing people, you have to ask a very diverse set of questions. I remember interviewing for a job on Wall Street one time, and they asked me like this, like a riddle, and it was the first time I had heard it. It was like there's one apple in a hat, and then you leave. There's two apples when you come back. I don't know the riddle exactly, but it was something where I was like, is this an interview for a banking like product or company, or is this like a something else? And so it's coming up with the questions that can test, almost
Mm.
personality along with skill set, real scenarios, asking them questions
Yeah,
that force them to provide real life examples of
yeah.
situations where been able to solve problems and deal with things that have come up. So you get a test for like how they deal with adversity and how they deal with, you mentioned before, a change in direction, right? To be very nimble. So those are all important things, and that's a skill.
Yeah, yeah, totally agree. I think you mentioned translating the interview to back to reality. How these people going to operate in the actual job can be kind of hard, because interviewing itself can be a bit of a skill, or people can get really good at answering those riddles or stereotypical interview questions. Do you have like a go-to set of questions, or a way that you like to assess folks' ability to handle adversity or change in direction?
But I always ask questions like, tell me something you failed at. And they're always like caught off guard, like, because everyone wants to spin it to a positive direction. And so it's like they start telling you what they failed at, and then you want to drill down further. Like, okay, why did you fail? How would you do it differently the next time you were in the same situation? So to me, it's like, and they oftentimes take it as like, I told them they failed, but I'm really asking them like, show me that you're humble enough to admit you failed. B, you are thoughtful enough to understand why it failed. And then three, you've actually cared enough to look after the fact and say, I know how I do this next time better.
Yeah, I like that. I think that's key. I look for things like that too around, self awareness or, nothing ever goes perfectly. So, what did you learn from the situation? Were you overwhelmed by it, or were you able to actually reflect, adapt, and learn from it from the next time? I think those are key.
Exactly right. And I think that that willingness alone, I think, tells a lot about a person. And so those are good questions for me. Some of my go-to questions.
Gotcha. Yeah, I had leaders very early on as I was starting managing in my career, impart upon me that hiring is one of the most important responsibilities within a company. Getting it right is very important. So taking the time, I think, is also important when you're screening, interviewing people to make sure you're not making rash judgments because it can be very painful when you get it wrong.
Well, I agree. And the hardest thing, as you become more senior in an organization, you're oftentimes meeting a candidate after they've already been screened by HR and then the direct report and then the senior manager. And so if it's a person of significance and they're coming to you and you're the fifth person that they're meeting, to go through the regular interview questions almost is silly and pointless. You want to do some of it to make your own assessment, but at the same time, you've got to find a way to be more thoughtful about what are like the key questions to differentiate yours from others who've already asked that question.
Yeah, and well, so then how do you balance that, the more approach or the mentality standpoint and just the technical ability, especially, with things like you guys are trying to do, maybe haven't been done yet. So you can't evaluate someone's track record. Like how do you do something that maybe hasn't been done? How do you evaluate just that technical ability?
But here's the good news, and this also speaks to things that have changed in our system. So, in the education system, as an example, everyone who's in school today, it used to be, if you were on a track for financial services, call it accounting, finance, right? You were learning a specific skill set, some idea of general education, but it's a certain skill set. And if you're, in the, going for a law degree, you're learning a certain skill set. I think that the baseline has expanded. Like there isn't a skill set that you're targeting today or that you're going for today that wouldn't provide you with a solid foundation in things like computer usage, like basic technical skills. And so I think when you're meeting someone today, even someone who has a law degree is going to be a lawyer for your firm or in compliance, they're coming with a knowledge of Excel and they know how to use certain like systems that they would use in the past. And it's almost like taken for granted. Whereas in the past, perhaps if you weren't pursuing a technical area, you weren't trained in that area. And that's why you're seeing, in my view, between LinkedIn Learning and other forms of education, or what I'll call continuing education, you're seeing a lot of people upskill themselves in later years of their career because they realize that some of the folks that they're competing with are folks who are quote unquote cross trained and dual trained, whereas they have a specific skill set. And so you're seeing a lot of folks educate themselves further along in their career to sort of help bridge the knowledge gap they've had previously with some of the more technical areas of banking and other areas.
Yeah, I like that. I think that's so true, and that's usually something I ask in interviews as well. Is I'll see from their resume, maybe they list a software package or something they use. So I ask, how did you learn that? What's your favorite hack or like shortcut you found that becomes part of it? Just to see like, are they happy with the status quo? How do they continue to evolve or use tools maybe in a new and novel way?
Absolutely. I mean, I think it's kind of like the basics today. And if you're coming into a company in any industry and you have no technical knowledge of the tools that are going to be used in that industry, you're obviously, your chance of being hired are far less.
Yeah, definitely. And I think AI, you mentioned earlier, one of those areas that does continue to change. There's tons of thought leadership out there, YouTube videos, Coursera courses, whatever to stay educated. Um, what are the adoption you're seeing within your partners, or maybe just your general observations? Where are we in the hype cycle? Like, are there real applications that are starting to take hold, or is there still a lot of experimentation? What's your perspective?
There's a lot of experimentation. I feel like it's like everyone has to have access to something. So I know
Mhm.
right away when it first came out, like we had a lot of demand internally. I think 45 requests for like ChatGPT. right? But a lot of it wasn't because they were like, insisting on AI. It was more like, hey, if they can prepare my PowerPoint for me for my meeting next week, I'm all in. And so I think it's different use cases. So it's not the case that people are like, it's about AI. It's about like, what can AI do to make me more efficient, allow me to focus on the things that I know I'm good at, and then take some of the burden off of me for things that I'm not good at or don't want to spend time on. And so I think there's a lot of experimentation going on even today. That said, there are a fair number of companies, including Upstart, as you well know, who've been using really some form of AI for a really long time. And so now it got like a buzzword name. But at the end of the day, when you're using alternative variables and you're able to provide scenarios that are more predictive of performance in lending, as an example, that's essentially AI. And so it's almost like it got a formal name. There are more people using it today. But really, it's not something that's actually truly new. It's just becoming more ubiquitous.
Yeah, I think you're right. And maybe using the phones as the analogy again, I'm sure we'll look back like 20, 30 years from now and it will be just so commonplace. It'll almost seem silly that we were thinking about it in the way we do sometimes today. But I'm sure other spaces will pave the way, and then banking will catch up and find the use cases once that it's kind of been sorted out.
Yeah, and the reason why I think, and again, a personal opinion, banking is generally often behind is because, again, you have that rigor. You
Yeah.
can't. It's not. It's a very heavily regulated industry. You can't just jump in and start using new tools without some concern of what those tools will do from a security standpoint, from a predictability standpoint, from a fair lending and governance standpoint. So there's so many unintended consequences of that technology. So adoption can't happen as fast. At the same time, I think over time you'll see adoption become more ubiquitous. You'll see banking services leverage AI. You're seeing it already in part today. And I think removing the friction for banking transactions will use AI as well.
Yeah, I think that's true. And I think you're right. Like the pace of change is necessarily maybe slower in some spaces. But it's a matter of sorting out where are the safe applications, where maybe are we getting it wrong today in a manual way that AI can actually increase, fair lending compliance, ability to manage risk and security, and how do you insert it into those places where it's beneficial?
Yeah, I mean, in some ways, I know like one of the big focuses today, in financial services is certainly fraud, right? It could be fraud in lending, certainly fraud in payments. That's where I think the most amount of fraud potentially is. But you think about what AI could do for fraud in terms of weeding out on the front end, weeding out folks who are trying to use your identity and providing better questioning up front or better verifications up front. On the back end for banks who are reviewing transactions, it can provide ways to make sure that they have keywords that are coming up in different searches to flag certain transactions. There's so many things that AI can do to help make banks more efficient, get them to look at more transactions, the right transactions, eliminate false positives. That's an example. And so there's so much that the technology can do to help really proliferate banking and make it more efficient.
Yeah, totally agree. Well, maybe it's a good time to pivot into a final question. Again, given like the landscape of AI, the ever-changing landscape in banking, is there someone you follow, like a thought leader, journalist, podcast, authors, maybe some bit of thought leadership you can leave us with? Like, who should we add to our library or podcast subscriptions?
So I'm not a big podcast guy. I listen to most of my podcasts when I'm running on Sunday mornings, and they're varied. I listen to things. I used to listen to Peter Renton's podcast all the time. But there's folks who send like weekly or semi-weekly emails.
Hmm.
Alex Johnson, I think his name comes to mind. There are others who I think send out really helpful. There's one called Money Stuff that I get every Wednesday. It focuses
Okay.
on credit cards and other similar products. So there's some good ones out there that are industry focused that I like a lot. That said, as you can imagine, I'm sure you're the same way. I'm inundated with emails in my inbox and different things to
Yeah.
read, and so it's almost like you click open, and then you hope that by Friday afternoon, over the weekend, you have time to catch up on all the things you've opened over the course of the week. If
Right.
IT doesn't make your computer restart, right? So hopefully
Yeah.
it's still there at the end of the week.
Yeah. Yeah. The number of tabs open. Maybe there's an AI app out there to like take and consolidate all the tabs I open into some digest.
Yeah, or read them for you and summarize them. Like, hey,
Exactly.
can you read these 20 articles and summarize the most salient points so I can look at it over the weekend?
That's right. Well, Adam, always good to catch up. I appreciate the time today and thanks again.
You as well. Thanks so much.